Coming up in today's show, stocks start the week on a higher note, an update on the Middle East conflict, an early look at Q3 earnings season, Bitcoin spikes 10% after a false report, and is now the time to buy small cap stocks. Hey guys, welcome back to the Click Capital Daily Market Show. Hope you all had a great weekend. My name's Jared. I'm going to get you all up to date to start the week off, and it was quite a bullish day on Wall Street. Pretty much every sector finishing in the green, with mega cap tech doing well, a jump up in small caps, and some other individual names doing well like Charles Schwab after their earnings, which I'll get into a bit later. But first, let me just get you up to date with what's going on between the Israel and Hamas conflict. So Israel's continuing its strikes along the Gaza Strip after having told citizens within the northern area to basically get out and go south. And America, along with its allies, is stepping up the diplomatic efforts to try and prevent a spillover, and is warning Iran-backed group Hezbollah from entering the conflict, and they're sending over a second carrier strike group into the Mediterranean with the objective of being a deterrent from anyone else entering this war. However, some are saying there's now a 70% chance that the war does spread beyond Gaza, with the odds being Hezbollah does get involved, and they're a much larger Islamic resistance militant group compared to Hamas. They've got tens and thousands of rockets, and they fight out of Lebanon on the northern border with Israel. And so Israel looks to be on the cusp of doing a ground invasion into the Gaza Strip, and that's already got Iran warning them of a regional escalation if that were to happen, with them likely giving Hezbollah the green light to go ahead and step up their attacks on Israel, whilst a lot of their defense force is down in the south fighting Hamas in the Gaza Strip. And that's already getting a bit of a war of words going between politicians on both sides, with US Senator Lindsey Graham telling Iran, if you escalate the war, we're coming for you. He said if Hezbollah, which is a proxy of Iran, launches a massive attack on Israel, I would consider that a threat to the state of Israel. He goes on to say, I will introduce a resolution in the United States Senate to allow military action by the United States in conjunction with Israel to knock Iran out of the oil business, with him specifically saying, Iran, if you escalate this war, we're coming for you. So still very much a fluid situation that could very well spill over, and so a tail risk remains in the oil market, especially at a time when the US Strategic Petroleum Reserve is at 41-year lows, which makes it a bit of a vulnerable time for oil prices to spike higher, and it doesn't allow for much cushion and margin of safety if we did see a huge spike in oil prices. However, just looking at crude oil futures today, they actually came off a little bit, just finishing the day slightly below $87 a barrel, right at their 50-day VWAP, on a low range and low volume. So I'd say a lot of traders in the markets are just on the sidelines watching this situation. However, like I said, there is tail risk here that we could easily spike above those highs late last month at $95 a barrel, and that should spook markets across the board quite a bit if that were to happen. And since long-dated treasury yields have been spiking of late, the normal go-to safety haven trade may turn more attention towards gold as one of the few places of refuge during the time of war and geopolitical instability, with one analyst saying gold reacts well on the back of uncertainty, and this is a very uncertain situation. Any war requires funding, and that comes from printing money. This is inflationary and therefore positive for gold. And just looking at the price action in gold futures today, it pulled back a little bit as well, as we got that huge spike up on Friday going into the weekend as a bit of a hedge that things might have spilled over there. Luckily they didn't, and hopefully they don't. However, I can imagine if they do, we'd see gold rip up to all-time highs in no time above $2,100 an ounce. However, if things come down in the Middle East, then the stock market could be in for a bit of a seasonal rally on the back of a better than expected Q3 earnings season. We're still very early on, just getting into the swing of it. We've already had 32 S&P 500 companies reported, and they're beating Wall Street's expectations by an average of 9% on earnings per share, with them being up 1% compared to the same quarter last year, in a sign that America's corporate earnings recession may be over. Remember, we had 3 consecutive quarters of year-over-year declines in earnings. The prediction for this Q3 earnings season as a whole is that we come in down 1% year-over-year, so basically flattening out, and then Q4 has actually been predicted as having 9% year-over-year growth. So analysts in the market are expecting earnings to start going back up from here. And if that were the case, in tandem with the cooling of tensions in the Middle East, that could be good grounds for a rally off these technically oversold levels as well. And looking out to 2024, the market's expecting earnings growth of 8 to 13% year over year. However, we've got a bit of a party pooper. Gary Gensler, head of SEC, saying it's nearly unavoidable that AI will cause a financial crash within a decade. He's calling for regulation to address how AI models are being used by banks on Wall Street. He said, I do think we will in the future have a financial crisis, and in the after action reports, people will say there was either one data aggregator or one model we've relied on. Maybe it's in the mortgage market, maybe it's in some sector of the equity market. However, the AI trade already appears to have lost some shine over the last couple of months. We can see that in the BOTS ETF. After ripping really hard into mid-July, from the start of the year, it's pulled back quite a bit, already reaching technical bear market levels, down 20% off its highs. Same with smaller AI stocks too, like C3 AI, down more than 50% from its highs, and again with Big Bear AI, already down over 80%. However, the leader of the pack, NVDA, still holding up there within 10% of its all-time highs at $500 a share. What's also been getting crushed lately is small cap stocks, with most of the Russell 2000 index being domestic US companies with revenue onshore. They've been more affected by ripping yields, and a lot of investors preferring to stay invested in mega cap tech as the new safety trade. However, just looking at a long-term spread chart of the Russell versus the S&P 500, we can see that's trading back down to levels we haven't seen since 2001, and the spread's down almost 40% from its highs. And looking on an absolute valuation basis as well of small caps, with their price earnings now down to around 12.5, that's well below the long-term average we've seen over the last 30 years. Of 18.1. And just looking at a weekly chart of the Russell 2000 ETF, we are sitting right down in this support zone where we've been consolidating for over a year now. And so even though no doubt it's going to remain a bit volatile in this space, there could be some long-term bargains to be had. However, we could still go lower, again just like we've seen in microcaps, which in the last couple of weeks actually lost their support they've had over the last year. In a strong sign that the small end of the market's really having a hard time here, and a lot different picture than the weekly chart of the Nasdaq, with about 40% of that index in those top 7 stocks. So definitely a tale of two markets this year. Another news out today, we saw Bitcoin briefly spike 10% after a false report that said the SEC approved BlackRock's spot Bitcoin ETF. And the first news we got of that a couple of months ago really got the price of cryptos moving higher, along with crypto companies like Coinbase. As for years, companies like Grayscale have been trying to do that, only to be blocked by the SEC, in which Grayscale fought back and actually won a court case. And so BlackRock, Fidelity, and a lot of others are now applied to launch spot crypto ETFs onto the market. And since they pretty much get every application approved, a lot of people are saying it's highly likely this goes through as well. As much as SEC head Gary Gensler does not want that to happen, as he's been fighting the industry for years now. And there's a look at the daily chart of Bitcoin, almost getting up to $30,000 a coin today. And this has been range bound pretty much all year as well, and struggled to hold above that 31,000 mark. But looking at crypto companies like Coinbase didn't seem to get much of a reaction at all. Over to economic data, there wasn't much out to start the week off, with a little bit more data coming out tomorrow. Inflation rate out of Canada expected to be 4% year over year. Then some retail sales and industrial production numbers from the States. Also be looking at crude oil inventories, some GDP data out of China, going into Wednesday inflation data from the United Kingdom along with the Eurozone, housing and building data from the States, a few Fed speakers, usual jobless claims on Thursday, and then finishing out the week with a few more Fed speakers. Fed Fund futures still giving around a 30% chance the Fed does another hike in December or January. Stock market's really not too excited at the moment, with the Fear and Greed Index at 36, nor are corporate insiders, only recording 24 purchases on Friday, and that's the lowest level we've got since back in late July on the day we topped. Just looking at international stock indices, they finished the day slightly higher. The volatility market was a little worried going into the weekend as well. We saw that huge pop up above 20. However, that pulled back a bit today to 17.2. Bonds are still volatile and moving around like stocks. A little bit of a bounce back in short-term Brett, but still got more stocks hitting new lows than new highs. Growth versus value spread still holding up. Gold still ripping versus treasuries as the safe haven trade, and inflation expectations just broke out to a new year-to-date high. Short-term yields are getting back up there with the 2-year at 5.10, got the 10-year at 4.7 and the 30-year at 4.84, and we may come up and retest these highs we got from a week and a half ago above 5%, and still very much possible that the 10-year hits 5%. However, if the conflict spills over in the Middle East, that'll probably keep a lid on yields, as we will get a bit of flight to safety there. And there's TLT dropping back down on a small range, and the dollar just sitting above 106. Commodities flat overall as well, and every single stock sector finishing in the green today, led by retail stocks up 2.7% and regional banks up 2.5%, and a bit of a pop up in the healthcare, bounce back in staples and utilities. There's BlackRock holding ground after Friday's earnings. Apple's earnings are still more than 2 weeks away. Got Microsoft in 8 days, along with Google, Amazon in 10. NVDA still more than a month away, and then the big one this week, Tesla on Wednesday. Meme stocks were mostly green on the day. Active today was Lululemon up over 10% on news they're getting added to the S&P 500. Bit of a bounce back in Birkenstock, and the defense contractors a bit flat today. Got Lockheed Martin reporting tomorrow, and the other big ones are all holding ground from when they gapped up last week, and those beaten down food stocks holding ground and finishing the day higher. Walgreens continuing to have a bit of a pullback after its earnings. 3M holding ground and a bit of a bounce back in Sphere Entertainment off that support level. Same with Verizon trying to find support here, and the regional banks all having a good day, finishing higher. Along with the big guys and Charles Schwab, which just reported earnings a little bit better than expected, and the market appeared to be pretty pleased with their report. After initially gapping down, finished the day a lot higher, up 4.6%, after it come off quite a bit these last couple of months. Okay, so there we are on the S&P 500, just hovering below the 50-day at 43.73. I think the market was pleased we didn't see an escalation in the conflict in the Middle East over the weekend. However, that's still very much a possibility this week, which would get oil spiking. And although yields would come back, stocks should probably react negatively to that on the back of a higher crude price, which would likely see gold rip as well. However, if things were to simmer down over there and yields keep consolidating, we may get a bit more of a rally out of the stock market here. May come out and test this resistance zone at 44.50 on the S&P, and especially if we keep getting good earnings beats coming in as we ramp up into Q3 reporting season, along with a bit of bullish seasonality and continuing bounce off this oversold level, the market could very well come up and retest that 4,500 level, and we'll just have to wait and see how we trade if and when we get back up there. However, there's still a lot of work to be done with breadth, and especially in the small end of the market as well, which has been pretty weak. So that's it for this Monday to start the week off. Let's all have a good one, and I'll see you again tomorrow afternoon. Cheers.